And mid-caps are the sweet spot of the corporate life cycle. Let's bring in Christian Greiner, Senior Portfolio Manager at FM Investments. Thanks very much indeed for coming on the show. Is this part of a risk-off phenomenon? People think, well, at least I can generally depend on a dividend?
That's part of it. Going into 2025, us, like a lot of market participants, saw that the concentration of returns was one of the biggest risks to the market. And so far this quarter, what we've seen is, sort of a spreading out of the returns and maybe a change in market leadership here. We've seen financials and healthcare take the reins here as well as energy, and values outperform growth for by 10% in these first 3 months. That's the largest it's done that in a couple of years. So we're kind of seeing a changing of the guard here, and we're going to see that dividend stocks are really starting to gain some attention here.
And also mid-caps. Give us an idea of what a mid-cap company is, what kind of market capitalization it would have.
So that is a little bit of a philosophical, depending on which one that you use. And those market caps can change pretty quickly as market goes. So we think about it, if you think about the S&P 500, think about the next 400 companies below that. And that's a good way of thinking about that. And those can be anywhere within, at this moment, you could say 6 to 7 billion to 25 billion, depending on the industry here. And for these, you're really hitting them in that sweet spot of that corporate life cycle. They're still growing sales. They're still expanding those profits. But you have a seasoned management team that's maybe gone through a business cycle, and they still have a funding advantage over their smaller cap peers.
You have some stock ideas for us. Starbucks, SBUX. You could argue it's discretionary. You could bring your coffee from home, but for a lot of people, it's an essential part of their day. Why do you like Starbucks?
Well, for us, this was a company that we just recently brought into the portfolio, into our value dividend portfolio. For us, it was a company that had fallen a little bit of hard times in terms of investment sentiment. That's usually when we like to come in, when it's sort of been abandoned by the investment community. They had a really big catalyst here, of course, with the hiring of Chipotle's CEO, Brian Niccol. Mm-hmm. And the company has invested not only in leadership, but they're really starting to invest in the physical stores as well. And we think that this is a multi-year investment story.
Your next idea is Snap-on, a provider of tools. It would seem like a classic cyclical stock in that that demand for equipment goes up when the economy is strong.
It is, and in some ways, this is a stock for the time. So for us, we've had this for a couple years. This is really kind of a bet on a quality management team here that has taken their namesake tool division, but they've also applied that to the commercial and industrial. And that's where really sales have been going pretty strong for them. The Snap-on tools, which are used in a lot of auto shops, those have seen sort of flattish organic growth over the last year and a half. That's starting to come out to the positive here. And this is actually one of the beneficiaries if we have these auto tariffs within the U.S. If we have those, people are going to be holding on to their older cars longer. Right now, the average vehicle age in the U.S. is about 12 and a half years and going higher. That's a record. So we would see people continuing to go to auto shops, and that will drive the sales of their tools.
And then your final idea is Toast, T-O-S-T. Remind us what they do, please.
Yeah, so this isn't really a household name yet. So if you ever go to a restaurant, maybe you've seen some of their hardware. It's what they bring to the table so that you can pay your check right there with a credit card. But if you take a look at the company, they touch pretty much every part of a restaurant, from everywhere from the host station all the way to the kitchen order station. And what they do is that they cut down on order error, as well as just being able to turn around the tables. It really helps the profitability of a restaurant, and it's reflected in the adoption rate that they've seen here. So this is really a mid-cap growth story that we like here. It doesn't come particularly cheap. It's been a U.S. story so far. They're just expanding into Canada, UK, and Ireland right now. But if you take a look at it from a PE to growth basis, it's very attractive to their peers and is one of those that might be another multi-year growth story.
We'd better leave it there. Thank you very much indeed for joining us, Christian.
Thanks very much for having me.
Christian Greiner, Senior Portfolio Manager at FM.